Hello, my name is Isaac Christopher Lubogo, and today I would like to have a wonderful discussion on digital money, things to do with Bitcoin, cryptocurrency, blockchain. You can find more in our book, The Law of Digital Money in Uganda. But for starters, cryptocurrency, like any other technological advancement, is a double-edged sword. It can cut through barriers to financial inclusion and innovation, but it must be wielded with wisdom and care to avoid what they call unintended consequences. So in the tapestry of progress, the threads of regulation, education, and international cooperation must be woven alongside the silk of innovation, creating what they call a fabric of financial evolution that serves all, not just a few. That's one of the quotations from our book. Find it at lubogo.org/jslawup.com. So let's try to appreciate the differences between digital currency, digital money, cryptocurrency, and cryptography. Right. Let's begin with digital currency. Now, digital currency is a broad term that encompasses all forms of currency in digital or electronic form. And this includes both digital representations of traditional fiat currencies, like the US dollar, for example, or the euro, and cryptocurrencies, obviously. So digital currency, basically in a general sense, represents a medium of exchange stored electronically. Take note of that. Now, if I were to argue in terms of examples, digital versions of traditional currencies, for example, central banks may issue central bank digital currencies, what they call CBDSs, which are digital representations of their national currencies. For example, the digital yuan, which they call ECNY, is a digital currency issued by the People's Bank of China. Now, cryptocurrencies, on the other hand, has to do things with Bitcoin, Ethereum, and other native digital currencies that use cryptography and blockchain technology. We will try to comprehend and understand what all that means. Now, digital money basically is a subset of digital currency, and it refers specifically to electronic representations of traditional fiat currencies such as the dollar or euros, and digital money is often used for online transactions, including payments, transfers, and even e-commerce. We will get there as we continue. By way of example, we may want to argue that bank deposits, for example, money may be stored in a bank account that can be accessed and transferred electronically, and also in terms of what they call digital wallets. So mobile payment apps, for example, like PayPal or Apple Pay or even Google Pay, store digital money for convenient online and in-store payments. Then we have what we call mobile money services, like, for example, M-Pesa, which happens in Kenya. Here in Uganda, we have mobile money, MTN, Airtel and the likes, in terms of using our phones to transact. Not so. Now, what is cryptocurrency? Cryptocurrency is a type of digital currency that relies on cryptographic techniques for secure transactions and the creation of what they call new units. So unlike digital money, cryptocurrencies are typically decentralized and operate on what they call a blockchain in terms of a distributed ledger technology. I'll give examples. For example, what they call Bitcoin. Other people call it BTC. And this is the first and well-known, cryptocurrency used for peer-to-peer digital transactions and often considered digital gold. Then there's what we call Ethereum, what they call ETH, a blockchain platform that actually supports smart contracts and decentralized applications, what they call DApps, and has what they call its native cryptocurrency. Then there's what they call Ripple, which is XRP, also known to be fast and low cost in terms of cross-border payments. So XRP is used in banks and also financial institutions. Okay, now let's comprehend cryptography. Now, cryptography is a field of study and practice focused on secure communication techniques in the context of cryptocurrencies. Now, cryptography is used to secure transactions, to control the creation of new units, and protect the identity of users. Now, it provides the foundational, security mechanism for what they call cryptocurrencies. Okay, now, if you had to argue in terms of an example, you could argue and say public and private keys. Now, users of cryptocurrencies have what they call pairs of cryptographic keys. Now, the public is, like an account number, and the private key is a password. So transactions are signed with the private key and verified with a public key. There's what we call hash functions. Cryptographic hash functions are used to create digital signatures and to secure integrity of data on a blockchain. Now, under that, we also what called encryption. Under cryptography is also used to encrypt data, ensuring that it remains private and secure during a transmission. Now, for purposes of a summary of sorts, digital currency encompasses both digital money and cryptocurrencies, with the key distinction being that digital money represents traditional fiat currencies stored electronically, while cryptocurrencies are decentralized digital assets secured by cryptography. Now, cryptography, on the other hand, is a technology, obviously, that underlines the security of cryptocurrencies and digital money transactions. Now, let's comprehend what we call blockchain. Blockchain is a distributed ledger technology that underlies many digital currencies, so like Bitcoin, and has a wide range of applications beyond cryptocurrencies, as we shall see. It's essentially decentralized and secure in terms of digital database or ledger that basically records transactions across multiple computers in a way that ensures their immutability in terms of transparency, in terms of security. Now, we're going to give some, examples or perhaps highlights of blockchain. Number one, decentralization. Unlike traditional databases that actually are centralized or controlled by a single entity, for example, banks or government, blockchain operates on a decentralized network of computers, what they call nodes. And this means there is no single point of control, making it resistant to a single point of failure. Okay, number two, transparency. All transactions recorded, for example, on a blockchain are visible to all participants in the network. Okay, so while the identities of the participants are typically what they call pseudonymous, the transaction details are open for anyone to inspect. This transparency usually enhances trust and accountability. Another aspect in terms of blockchain is security. Blockchain uses strong cryptographic techniques to secure transactions. So once a transaction is added onto a block and confirmed by the network, it becomes extremely difficult to alter. This immutability enhances security and reduces the risk of fraud. Not so. Now, another issue in terms of blockchain is what they call consensus mechanism. Now, blockchain uses consensus mechanism, for example, proof of work or proof of stake, to validate and add new transactions to the ledger. These mechanisms ensure that all participants in the network agree on the state of the ledger, preventing what they call double spending and other fraudulent activities. Now, also in terms of a lookout for blockchain is what they call smart contracts. Many blockchain support smart contracts, which are self-executing agreements with the terms of the contract directly written into a code. Now, smart contracts can actually automatically execute actions based on predefined conditions, which can actually streamline financial processes and also reduce the need for intermediaries. Okay, now let's look at it also in terms of cryptocurrencies, blockchain vis-a-vis cryptocurrencies. So many digital currencies such as Bitcoins and Ethereum are built on blockchain technology. Now, these cryptocurrencies use blockchain to record and to secure all transactions. For example, Bitcoin's blockchain records every transaction made with Bitcoin, including the sender, the receiver's addresses, transaction amount, and even timestamp. So remember that. Okay. Blockchain also can be relevant in terms of what they call cross-border transactions. Blockchain technology has potential to make cross-border transactions more efficient and cost-effective by eliminating intermediaries and even speeding up settlement times. Also, in terms of another issue in terms of blockchain, it also helps in what they call supply chain management. So blockchain is used to track and to verify the origin and the general products in supply chains, enhancing transparency and even reducing on fraud. Blockchain also could be relevant in terms of voting systems. Some blockchain-based systems are explored for secure and transparent voting in terms of elections. Blockchain can also be relevant also in terms of digital identity. Blockchain can actually be used to manage and secure digital identities in terms of reducing identity for theft and also in terms of fraud, as it were. So in summary, one can take away and agree that blockchain basically is a transformative technology that offers a secure, transparent, and efficient way to record and even manage transactions, and also data and also assets. So its applications usually extend far beyond cryptocurrencies and is being explored now in various industries for their potential to enhance trust and also reduce costs and also improve on security. Now, we're going to give some examples of how blockchain technology is being applied in various industries. Number one, it is used in cryptocurrencies. Please remember that. So blockchain technology now is used in cryptocurrencies. Now, Bitcoin, for example, and Ethereum are some prime examples of blockchain technology in the world of digital currencies. So they use blockchain to record and secure transactions, creating what they call a decentralized and transparent payment system. Number two, it can also be used in terms of supply chain management. So companies like, say, IBM or even Walmart are using blockchain to track and verify the origins of products. And this ensures what they call authenticity to goods and also reduces fraud in the supply chain. Number three, they are being used in terms of what they call smart contracts. So Ethereum, for example, introduced the concept of smart contracts, which are self-executing contracts with the terms of the agreements directly with written codes, as it were. So these contracts automate and enforce agreements without the need of intermediaries. Now, also in terms of healthcare, blockchain, for example, is used to secure and manage, what they call shared patient data, enhancing privacy and what they call interoperability between different healthcare providers. Okay. Also, we could also find it in terms of voting systems, where some government, for example, organizations are exploring what they call blockchain based on voting systems to enhance the security and transparency of elections. Okay. Right. Blockchain technology can also be used in what they call cross-border payments. Now, blockchain technology is being used, for example, to make what they call cross-border payments, which in a faster way and also in a more cost-effective by eliminating, again, those so-called intermediaries. Now, also blockchain is engaged in what they call digital identity. Blockchain can actually be used to secure and manage and verify digital identities, reducing the risk of identity theft and even fraud. Also, as another one, blockchain is also used to streamline real estate in terms of securing what they call real estate transactions, reducing on fraud and speeding up what they call transfer of property in terms of ownership. Blockchain is also being used in what they call IP, or intellectual property, where we're arguing that artists and creators can actually use blockchain to record and protect their intellectual property, ensuring that they receive fair compensation for their work. Also, blockchain is being used in terms of what they call energy trading. So some blockchain platforms, for example, allow for peer-to-peer energy trading, enabling individuals and organizations to buy and sell excess energy on a decentralized network. Okay. Blockchain also is being used in terms of what they call food safety, where we're arguing that blockchain is actually used to trace the origins of food in terms of products, and also helping quickly identify and recall any contaminated or even unsafe items. Also, blockchain is actually used in education, in the sense that it can be used to secure and store and even verify education credentials and certificates, making it easier for employers, for example, and education institutes to validate these qualifications. Blockchain is also used in terms of gaming. Blockchain is basically used in terms of games, which often are referred to as blockchain games or decentralized applications, what they call DD apps. So they use blockchain technology to ensure true ownership of in-game assets and digital collectibles. Okay, so that's also important to know. Blockchain also can be used in terms of insurance, where we're arguing that blockchain can actually streamline the claims processes in terms of the insurance industry, thereby reducing fraud and also speeding up settlements. Now, also, blockchain can actually be used in terms of legal and notary services. Blockchain can be used to create what they call immutable records of legal documents and notarized agreements, and therefore enhancing trust and also transparency. So those are just a few examples of how blockchain technology is being applied across various industries. And therefore, we can argue comfortably that the potential in terms of the application of blockchain are quite vast, and the technology continues to evolve, creating new opportunities in terms of innovation and disruption. Not so. Now, I would also like to argue in terms of some well-known cryptocurrencies by highlighting some of their primary features and some of the general pros and cons, as the case may be. We will start probably with the popular one, the one they call Bitcoin, BTC. Now, if you're arguing BTC as an advantage, you probably want to argue that it was the first one in terms of it was looked at as pioneering, in the sense that Bitcoin is the first and the most recognized cryptocurrency. It is used as a store of value, often referred to as a digital gold, and it is seen as a store of value and hedge against inflation. Okay. In terms of security, Bitcoin has a robust and secure network. In terms of disadvantage, someone can argue that it has an aspect role that they argue in terms of what they call scalability, in the sense that Bitcoin faces challenges in handling a high volume of transactions, which can lead to slow confirmation times and also high fees. In terms of environmental concern, the energy-intensive proof of work, what they call the POW, consensus mechanism, has actually raised environmental concerns as far as Bitcoin is concerned. So that could be looked as a disadvantage of sorts. When you're arguing another cryptocurrency, perhaps let's look at Ethereum, what you call ETH. In terms of advantage, it is used in terms of smart contracts. So Ethereum introduced smart contracts, enabling what they call self-executing agreements. In terms of decentralized applications, what they call the DApps, it's a platform for building various DApps. In terms of innovation, Ethereum is a hotbed for blockchain and also DFI innovation. If you're looking at it in terms of disadvantage, again, argue in terms of scalability, in a sense that Ethereum has actually faced issues with network congestion and high gas fees. Okay, and also in aspect of transition to ETH 2.0, the transition to a proof of stake, what they call the POS, in terms of consensus mechanism and scaling improvement, is a complex and still an ongoing process. Another cryptocurrency is what they call Ripple. Some people call it XRP. As an advantage, it is speedy in the sense that Ripple is known for its fast transaction and confirmation times, and it's also helpful in terms of cross-border payment. It is used by banks and financial institutions for what they call cross-border payments. And in terms of consensus algorithm, it uses what they call consensus algorithm for transaction validation. As a disadvantage, perhaps, you may want to look at it in terms of centralization concerns. Ripple has faced criticism for being more centralized compared to other cryptocurrencies. And in terms of legal challenges, yes, Ripple Labs has actually faced legal challenges, for example, from the US, in terms of SEC, regarding what they call XRPS classification. So that can be looked at as a disadvantage. Another cryptocurrency that comes to mind is what they call Litecoin, what some people call LTC. In terms of an advantage, it is speedy, yes. In terms of fast block generation times, it therefore make it itself suitable for quick transaction. Some people look at it as silver to Bitcoin's gold, so often it referred to as a digital silver. It is important in terms of it creates a strong community. It has what they call dedicated and active community. And if you look at it in terms of disadvantages, it is limited in terms of differentiation. And Litecoin's features are actually similar to Bitcoin's, leading to a question about its uniqueness, not so. And in terms of competition, it also faces competition from other faster, cryptocurrencies. So that is something that is important for you, again, to note. Another cryptocurrency that comes to mind is what they call Cardano. Some people look at it as ADA or call it ADA. In terms of advantages, it's looked at in terms of scalability, in the sense that Cardano aims to offer a scalable and sustainable blockchain platform. In terms of peer review research, it has been developed with an emphasis of academic research and formal method. In terms of decentralized governance, ADA holders can actually participate in decision-making processes. If you're to argue in terms of a disadvantage, then you will look at it in terms as an ongoing development, and Cardano is a work in progress and some features are still under development. If you look at it in terms of competitiveness, then you will argue and say that competitiveness in terms of a crowded space of smart contract platforms is perhaps something that comes into mind. Another cryptocurrency is what they call Polkadot. Some people call it DOT. In terms of advantage, it is interoperability. It's called interoperability in a sense that Polkadot aims to connect different blockchains, improving compatibility. Now, in terms of governance, it has an on-chain governance system, allowing token holders to vote on a network upgrade, as it were. In terms of scalability, it offers what they call scalable framework for building what they call DApps. Now, when you argue in terms of a disadvantage, it is complex, there's no doubt about that. Polkadot's design and structure can actually be complex, requiring a serious learning curve. In terms of competitive sales, it faces competition from other blockchain interoperability projects, as I just mentioned. Now, another cryptocurrency is what they call Chainlink. In terms of advantage, it's basically very popular with Oracle services, and Chainlink connects what they call smart contracts with real-world data. And in terms of decentralization, it provides for decentralized solution for what they call trustless data feeds. If you're arguing in terms of disadvantage, then you would argue in terms of dependency. In others, many DApps depend on chain links in terms of oracles, leading to potential centralization risks. And in terms of market competition, it faces competition from other Oracle solutions. So those are some of the the takeaways of the different types of cryptocurrencies that are unique, with, in the sense that each one has its unique strength and each challenge, as it were. So it's important when you're evaluating the pros and cons of a cryptocurrency to consider perhaps the specific use, the technology, and even the current state of the project. So it's important for any potential investor, for example, to conduct a thorough research before getting involved in any kind of cryptocurrency. Not so. I will point out a few others that are not as popular as the ones I mentioned above, but also try to argue them in terms of the strengths and weaknesses that they offer. Now, there's what we call Beacons. Some people call it Beacons coin. They call it BNB. As an advantage, it has reduced transaction fees. So BNB offers, can benefit from what they call reduced trading fees on a Binance exchange. It has a wide adoption in the sense that BNB is used across various applications within the Binance ecosystem. As a disadvantage, obviously, one can look at it in terms of centralization, in the sense that some critics argue that BNB's central role within the Binance platform raises concerns about centralization. Now, another cryptocurrency is what they call Stellar. Some people call it XLM. If you argue that in terms of advantage, then you want to argue and say it gives you what they call cross-border payments. So Stellar is actually designed for fast and low cost cross-border transactions. Not so. And sometimes it's used in non-profit foundations. So Stellar Development Foundation, focuses on financial inclusion, on social impact. If you are to argue it in terms of disadvantage, then you want to look at it in terms of competition. It faces competition from other cryptocurrencies which target the same use or case, as it were. In terms of market adoption for cross-border payment is ongoing, and it's not widespread as traditional remittance services. So that is something in respect to that. Another cryptocurrency that comes to mind is what they call Tezos. Some people call it XTZ. Tezos have an advantage of what they call self-amending. Tezos has a self-amending blockchain, and therefore allowing an on-chain governance and upgrades. And it's also used majorly in smart contracts, in terms of support smart contracts, and in development of what they call DApps. As a disadvantage, you may want to look at it in terms of the challenges. Tezos has actually faced legal challenges in its initial on-coin offering. So look at it in terms of that. And also, in terms of competition, it competes with other smart contract platforms as I just mentioned. Now, another cryptocurrency is what they call Dash. Some people call it DASH, Dash. In terms of advantage, it has what they call instant send. In other words, it offers an instant transaction in terms of confirmation through an instant send feature. Now, in terms of governance system, it employs the treasury and decentralized governance model. When you're arguing in terms of disadvantage, you may want to look at it in terms of the privacy concerns. Dash's privacy features have actually raised concerns in some jurisdictions. When you're arguing in terms of competition, it competes with other privacy-focused, cryptocurrencies, as discussed. Now, another cryptocurrency that comes to mind is what they call Monero. Some people call it XMR. Now, in terms of advantage, Monero offers strong privacy features, making transactions confidential and untraceable. And there's also an argument in terms of what they call fungibility. So XMR is also considered highly fungible, as each unit is actually interchangeable with each other. In terms of disadvantage, it has what they call regulatory scrutiny. So the privacy features have led to what they call regulatory challenges in some regions. So also, if you look at it in terms of scalability, Monero faces challenges in terms of scalability and transaction speed. So look at it that way as well. Another example would be what they call Avalanche, which we call AVAX. In terms of advantage, it is high throughput. So Avalanche aims to provide fast and scalable transactions, and it is majorly used in what they call custom blockchain. So users can create their own custom blockchain networks. Now, as a disadvantage, it has competition. It competes with what they call crowded space of blockchain in terms of the platforms. and in terms of ongoing development, some features are still under development. So look at that as well. Now, there's another cryptocurrency that they call compound. Some people call it comp. Now, as an advantage, it's looked at as a DeFi lending. Compound is a leading DeFi lending protocol, enabling users to earn interest on deposited assets. Okay, in terms of governance, comp, for example, we're arguing that comp token holders participate in what they call protocol governance. In terms of a disadvantage, it has what they call risk. In others, these DeFi lending platforms come with inherent smart contract and financial risks. In terms of regulatory concerns, DeFi platforms may face increased regulatory scrutiny. So those are some of the things that you need to look out for. So these cryptocurrencies cater for various use cases, including payments, including smart contracts, including privacy, including DFIs, and so evaluating the pros and cons of each helps you to consider their specific goals in terms of technology as well as current market dynamics. So cryptocurrency investment and users should actually be well researched and aligned with individual objectives. Okay, many people may not really know how wide cryptocurrencies may go, but I would like to argue and bring some more so that you're well conversant, because all these things we have talked about in our book, Digital Money. This is what they call Filecoin. Some people call it FIL. Okay, in terms of an advantage, it has what they call decentralized file storage. Now, Filecoins allow users to buy and sell and use storage space in a decentralized network. Now, some people use it as incentive mechanism. Now, miners, for example, are rewarded for providing storage and even maintaining the network. As a disadvantage, perhaps, it's complex in terms of economics. The economic model can actually be complex to understand for non-technical users. In terms of competition, it faces competition obviously from other decentralized storage solutions. Please understand that. Another cryptocurrency is what they call EOS. EOS. Now, EOS has an advantage in a sense that can be argued in terms of its scalability. Now, EOS is designed for scalability, allowing for a high volume of transaction and dApps. Now, it is also user-friendly in a sense that it focuses on what they call a user-friendly experience for developers and even for users. Now, if you're arguing in terms of disadvantage, then you will look at it in terms of, again, centralization concerns. Some critics have actually raised concerns about EOS in terms of block producer system. They argue that it also lacks adoption in a sense that despite its scalability, EOS has faced challenges in terms of gaining widespread adoption. Okay. Now, another cryptocurrency is what they call IOTA, or some people call it MIOTA. As an advantage, the Internet of Things, in terms of IOTA, is designed for machine-to-machine transactions in the Internet of Things sector. In terms of scalability, it uses unique Tango technology for scalability. As a disadvantage, perhaps, you want to look at it in terms of decentralization as a challenge, because IOTA has actually faced centralization concerns and network outrages. Okay? In terms of competition, it competes obviously with other blockchain projects targeting what they call Internet of Things, as it were. Please find some of those things again in our book, The Internet of Things. Then another cryptocurrency is what they call VeChain. Some people call it VET. VeChain or VET. Some people look at it in terms of an advantage. It helps to supply chain and traceability. So VeChain is used for supply chain management and product traceability. So in real-world integration, for example, partnership with various industries for real-world applications is very, very common in terms of that. As a disadvantage, people have issues in terms of adoption challenges, where we're saying that adoption in supply chain and logistics can actually be slow due to industry-specific hurdles. And when you're arguing in terms of market competition, it faces competition in supply chain management space. Okay. Another cryptocurrency is what they call the Dogecoin. Okay, Dogecoin or the Doge. As an advantage, community and means in terms of Dogecoin has a strong and active community known for its memes and humor. So it's very fast in terms of transaction, and it also offers fast transaction confirmations. Now, in terms of disadvantage, it lacks, there's what they call lack of development. Historically, Dogecoin lacked serious development compared to other cryptocurrencies. And also you can be argued in terms of what they call inflationary supply. So Dogecoin has unlimited supply, which can actually impact its potential as a store of value. Now, another cryptocurrency is what they call Cosmos. Some people call it Atom. In terms of advantage, has what they call interoperability, in the sense that Cosmos aims to connect different blockchains and enable cross-chain transactions. Now, there's also what they call tandemate consensus, in the sense that it uses what they call tandemate algorithms for security and scalability. In terms of disadvantage, it is complex for an ecosystem, and the Cosmos ecosystem can actually be complex for newcomers to navigate. In terms of market competition, it faces competition from other blockchain interoperability projects, as it were. Now, obviously, with any investment or usage of cryptocurrencies, it's essential to consider, as I said, your specific goal and your objective. And therefore, it is important to carry out substantive research and due diligence. Okay, these are very key when evaluating the advantages and disadvantages of individual cryptocurrencies. The cryptocurrency market is dynamic, and its landscape can actually change over time. So staying informed is extremely, extremely, extremely important. Now, we also want to agree that digital money has often referred to as cryptocurrency, is a form of digital, as I said, or virtual currency that uses cryptography for security. Now, cryptocurrencies, as I said, are decentralized and typically based on blockchain technology, which is a distributed ledger that records all transactions. So they offer several potential benefits. Now, let's look at some of those potential benefits. Number one is security. Cryptocurrencies use strong cryptographic techniques to secure transactions and control the creation of new units. So this makes them highly secure and resistant in terms of fraud and in terms of counterfeiting. Advantage number one. Advantage number two, accessibility. Cryptocurrencies are accessible to anyone with the internet connection, allowing for financial inclusion for those who may not have access to traditional banking services. Not so. Number three, transparency. Blockchain technology ensures transparency and immutability in terms of transactions, therefore reducing the risk of corruption and fraud. Not so. Now, another advantage is lower transaction costs. Digital currencies can actually facilitate what they call cross-border transactions with low fees and faster settlement times compared to traditional financial systems. Okay. Number five, as another advantage, is what they call financial innovation. Cryptocurrencies have actually spurred innovation in the financial sector, giving rise to decentralized financial, what they call DFI, applications and smart contracts. Not so. Now, the question is, as for Uganda, should Uganda, for example, embrace digital money? I would argue and say, because of the following reasons, Uganda should embrace digital money. Because of its financial inclusion, Uganda has a significant unbanked population, so embracing digital money can actually provide financial services to those who are currently excluded from the traditional banking system. Number two, I would also want to argue, as a case for Uganda, in terms of reducing remittance costs. Uganda receives a substantial amount of remittances from the Uganda diaspora. Okay, so cryptocurrencies can actually lower the cost associated with remittances, providing for more funds to the recipients. Number three, I would like to argue in terms of economic growth. By embracing digital money and blockchain technology, we can attract investment and actually foster innovation in various sectors of the economy, potentially, driving what they call economic growth. Number four, another advantage for Uganda is what they call reducing corruption, which is a big lion, or big elephant for that purpose. So the transparency of blockchain technology can help reduce corruption in government and other institutions. Not so. So it's important, by the way, to note that the adoption of digital money, including cryptocurrency, should be done carefully. How? In terms of regulatory frameworks that need to be established to protect the consumers, in terms of prevention of fraud, and ensure that the financial system remains stable. So this means that education and awareness as a program are essential to inform the public about the risks and the benefit of using what they call digital money. Now, digital money, obviously also known as electronic money or e-money, no doubt, as I've been arguing, refers to a broad category of currency or even monetary value that has actually been stored electronically and can be used for various financial transactions. So it is a digital representation of traditional currency, such as your so-called dollar or your so-called euro. So it can be native in terms of digital currency, like cryptocurrencies. Now, as again, I'll give you some examples of digital money. Let's argue digital money, right? Now, digital money, example number one, are bank deposits. This is the most common form of digital money. So when you deposit money, for example, in a bank, it's recorded digitally on your account. So you can then use checks or debit cards or what they call online banking to access and transfer these funds. Number two, mobile money. Mobile money like Pesa in Kenya, or mobile money in Uganda, MTN or whatever, which is a super thing. I think it's a great invention for Africa. Okay, so it enables users to store money using their phones and transfer electronically. Okay, so you can deposit your money on your phone and send it to others. You can even pay bills and even make purchases, right? Number three, digital wallets. Digital wallets like, PayPal or even Apple Pay or even Google Pay, for example, and others store your payment information that allow you to make online and in-store purchases without using physical cash or cards. Not so. And then number four, cryptocurrencies, right? As an example, I just argued Bitcoin, Ethereum, and many others. These are entirely digital currencies, obviously, that use blockchain technology for secure and decentralized transactions. So you can use cryptocurrencies for various purposes, including online purchases, investment, and even remittances. Not so. And then number five, prepaid cards, right? Prepaid cards, or what people call credit cards, can actually be loaded with a specific amount of money and used for transactions until the balance is what? Depleted. Not so. And another one is what they call central bank digital currencies, what they call CBDSs. Some central banks are exploring the idea of creating their digital currencies, and so these will be official digital representations of their national currencies, providing secure and government-backed form of digital money. And then number seven, we could also look at what they call online banking. Online banking platforms allow you to engage your funds, for example, pay bills, transfer money, and even make investment entirely through what they call digital interfaces. Not so. And then number eight is what they call peer-to-peer payment apps. So apps like Vamo, for example, or even Cash App, which facilitate what they call person-to-person massive transfer, mobile money transfer, or what we call it money transfers via smartphones. And then number nine is what they call digital gift cards. So these are digital representation of gift cards that can actually be used to make purchases at specific retailers or online stores. Not so. So digital money basically is increasingly replacing what they call physical cash for everyday transaction due to its convenience in terms of security, in terms of accessibility. However, the adoption and the use of digital money can actually vary significantly by region in terms of the level of technological transfer or infrastructure for that fact. So it's important to note that the specific feature and the functions of digital money can actually vary in terms of different forms, and each may actually have its advantage and even limitation. I just argued that exhaustively. Right. I will argue and then still re-emphasize that blockchain therefore becomes the foundation technology that underlines the many or the much digital money systems, including cryptocurrencies. It is distributed ledger technology that records transactions, as I said, in secure and transparent manner. Now, if you are to argue blockchain in the context of digital money, right? Let's argue blockchain in the context of digital money. For starters, we'll argue it in terms of decentralization. So unlike traditional financial systems, which rely on central authorities, for example, bank and governments, blockchain operates on a decentralized network of computers. This means there is no single point of control, making it resistant to single points of failure. Number two, in terms of transparency, all transactions recorded on a blockchain are visible to all participants in the network. So while the identities of the participants are typically pseudonymous, the transaction details are open for what they call anyone to inspect. So this transparency can enhance trust and accountability. Not so. Also, in terms of security, blockchain uses strong cryptographic techniques to secure transactions. So once a transaction has actually, is added on a block and confirmed by the network, it becomes extremely difficult to alter. So this immutability enhances security and reduces the risk of fraud. Okay, and then obviously aspects to do with what they call consensus mechanism. Blockchains use consensus mechanism like proof of work or proof of stake to validate and even add new transactions to the ledger. So these mechanisms obviously ensure that all participants in the network agree on the state of the ledger, preventing what they call double spending and other fraudulent activities. And then number 5, you could look at it in terms of what they call smart contracts. In others, we have to argue that many blockchains support what they call smart contracts in terms of self-executing agreements with the terms of the contracts directly written into code. So smart contracts can automatically execute actions based on predefined conditions, which can actually streamline financial processes and even reduce the need for intermediaries. And then obviously number 6 is what they call cryptocurrencies, where we're arguing that many digital currencies such as Bitcoin and Ethereum, as I just told you, are built on blockchain technology. So these cryptocurrencies use blockchain to record and secure all transactions. For example, Bitcoin's blockchain records every transaction made with Bitcoin, including the sender, the receiver's addresses, the transaction amount, and the timestamp, as it were. And then number 7, you want to look at it in terms of what they call cross-border transactions, where we're arguing that blockchain technology has the potential to make cross-border transactions more efficient and more cost-effective by eliminating intermediaries and also speeding up settlement times. And then number 8, you want to argue it in terms of what they call financial inclusion, where we're arguing that blockchain can actually be used to provide financial services to underserved populations, especially in regions with limited access to traditional banking infrastructure. So mobile wallets and blockchain-based systems can actually enable financial inclusion, which is very common, I think, in Uganda today. There's mobile money almost on every part of the country today. So in the context of digital money, blockchain provides a secure, a transparent, and an efficient way to record and manage financial transactions. So it has the potential again to disrupt traditional financial systems and to promote financial innovation. So however, it is important to know that while blockchain offers many benefits, it also faces challenges related to scalability, energy consumption, and regulatory considerations. And that is very, very important, by the way. So digital money basically comes in various forms with its advantage. I'm going to try to also talk about the types of digital money and their respective advantages. I know that in one way or the other, I have been able to juggle in here and there, but if I'm arguing cryptocurrency per se, as an advantage for cryptocurrency, I would argue it in terms of as an advantage in terms of what they call decentralization. Cryptocurrencies are not controlled by the central government, and therefore they offer financial autonomy, right? That's extremely important. Number 2, there is what they call security. They are strong cryptographic techniques that make cryptocurrencies highly secure, okay? And then in terms of transparency, all transactions are recorded on a public blockchain, enhancing transparency. And then global accessibility, in the sense that cryptocurrencies can actually be used globally, providing for financial inclusion and lower transaction fees. Transactions can actually be cost effective from cross-border transfers, right? Okay, let's look at mobile money on the other hand. As an advantage, perhaps, which is very common in Uganda per se, it is easily accessible. It provides access to financial services through basic mobile phones. Not so. Any basic phone, even a non-smartphone, as it were. I know that smart has advantages, but I'm just being basic in terms of argument. In terms of financial inclusion, it helps unbanked and underbanked populations to access what they call banking services. In terms of remittance, it facilitates low-cost remittance and money transfers, right? Now, in terms of digital wallets, let's look at digital wallets. When you talk about digital wallets, for example, PayPal or Apple Pay or perhaps Google Pay, in terms of advantage, it is convenient and it simplifies online and in-store payments, no doubt about that. In terms of security, it utilizes what they call encryption and tokenization for what they call secure transactions. In terms of compatibility, it works across a wide range of devices and platforms, no doubt about that. Now, another that we may want to look at is what they call central bank digital currencies, the CBDS, as advantage. It helps in government banking, no doubt about that. It offers what they call government-backed digital alternative to physical currency, okay? And as a security, it ensures stability and security for digital financial systems. And in terms of monetary policy control, it provides for central banks with more control over monetary policy. Right. Now, let's also look at online banking as a discourse in terms of the pros and cons. Online banking, in terms of advantage, it is easy to access. In terms of, it allows users to manage their finances and make transactions from anywhere, for example. And in terms of convenience, it streamlines bill payments, fund transfers, and even account management. So you may want to look at it in terms of that perspective. Then there's what they call peer-to-peer payment apps. And here, these are called things like Vamo or even Cash App. Now, in terms of advantages, these are convenient, no doubt about that. They are simplified in the sense that they engage person-to-person money transfers via their smartphones, not so. And in terms of social integration or integration for that purpose, they allow for, it allows users to share payments and even expenses with friends and even contracts. If you had to argue prepaid cards as an evaluation of their performance, then you will want to look at it in terms of advantages. It's easier to control. In other words, you can limit your spending to the card's balance, helping with your budget, and there are no credit checks. It's accessible to individuals without a traditional bank account. Okay, so that is something that you may look at it in terms of its strength. Now, in terms of digital gift cards, they're what we call digital gift cards. In terms of advantages, you could argue it in terms of flexibility, in the sense that it provides for what they call a convenient and customizable gift option. Okay, and it can also be helpful in terms of online shopping and can be used for online purchases at various retailers. So when you're arguing that, then you have to be it's very important that the advantages of each type of digital money vary based on the specific need of the user. So for example, cryptocurrencies, as I just argued, are suitable for those seeking financial autonomy and privacy, while mobile money is essential for regions with limited access to traditional banking. Digital wallets offers, for example, convenience for online shoppers, while CBDS provide for government-backed digital currency. Not so. So the choice of your digital money will depend on the factors such as security, such as accessibility, cost, and even the level of trust in the underlying technology and institution. So there are thousands of cryptocurrencies, so each with its unique feature and advantage. So it's not feasible for me to discuss all of them, but I can, as I said, I'll provide the basics, and in doing so, I'll highlight the advantages. I know I have done that earlier, but for purposes of emphasis, because these are things that the world needs to know. Bitcoin, BTC, as an advantage. No doubt it was a pioneer, fast cryptocurrency. It remains mostly widely recognized. Very secure in the sense that it has a robust network and is considered secure, no doubt about that. Now, in terms of store value, it's often compared to digital gold, as I told you. It can also act as a store for value and has what they call hedge against inflation. Okay. Ethereum, what they call ETH, advantage, smart contracts, in the sense that Ethereum introduced smart contracts enabling self-executing agreements. It is decentralized in terms of its application, and its platform is basically important or useful for building various dApps. In terms of innovation, Ethereum is a hotbed for blockchain and DeFi innovation. Another one is Ripple. I'm just going through for purposes of comprehending and making sure that we are, understanding our discussion very, very thoroughly. Not so. Ripple, XRP, advantage, is known for fast transaction and for confirmation times. Not so. It's important in terms of cross-border payments and is used by banks and financial institutions across border payments. Litecoin, LTC, in terms of advantage, it's fast for block generation in terms of times and also makes it suitable for quick transaction. And important, it's a silver to Bitcoin's gold, so it's often referred to as a digital silver. Remember that. So there is also Cardano, as I just told you, ADA. I remember I argued that in my introduction when I was trying to make the different types of cryptocurrencies. But now I'm looking at it in terms of concentration, because all this, as I said, is important for you to comprehend digital money and the entire subject. It has the advantage of scalability in the sense that Cardano aims to offer scalable and even sustainable blockchain platform. And in terms of peer-reviewed research, it is developed with an emphasis on academic research and even formal methods. We talked about Polkadot. Remember the dot? In terms of advantage, it has that aspect of interoperability in the sense that Polkadot aims to connect different blockchains in terms of improving compatibility. In terms of governance, it has an on-chain governance system allowing token holders to vote on the network upgrades, as it were. Chainlink, remember Chainlink? I told you about Chainlink as an advantage in terms of its usability. It's majorly under Oracle services. Chainlink connects what they call smart contracts with real-world data. And then we argued in terms of the fact that it's decentralized and therefore provides a decentralized solution for trustless data feeds. Remember that? Then we talked about Binance, remember? Or some people call it Binance for pronunciation purposes. BNB, Binance coin. In terms of advantage, utility, BNB is used with the Binance ecosystem for trading, fee discounts, and even more. In terms of token bans, its periodic token bans reduce the supply, potentially increasing its value. Then we talked about Stellar, remember? Stellar, what some people call XLM. In terms of advantage, it's useful for cross-border payments. Stellar is designed for fast and low-cost cross-border transactions. And it helps in terms of focusing on financial inclusion. It targets what they call undeserved populations. And then we could argue also in terms of Tezos. Remember? Tezos, XTZ. In terms of advantage, it is self-amending in the sense that it has a self-amendment. So Tezos has a mechanism for on-chain governance and even upgrades. Okay? As in terms of security, it focuses on major security and formal verification as an advantage, as it were. So those are some of the major ones that I would argue in terms of the advantages of cryptocurrencies. But as I say, the advantages will vary on the use in terms of particular cases and the design. And some are designed for speed and some for low fees, while others emphasize security and decentralization. So it's important to research and understand the specific feature of the cryptocurrency before investing or using it. So each has its own strength and weaknesses. Additionally, cryptocurrency market, as I said, is highly volatile. So it's crucial to exercise caution when you do due diligence. Okay? Due diligence, and be careful when you're doing that. Because of the importance of the subject, I would be fair by still taking you through, although I have mentioned in passing, Chainlink, for example, as an advantage in terms of Oracle services, Chainlink, which connects to smart contracts and real-world data, and the fact that it's decentralized, it provides for decentralized solutions and trust, data feeds. And then Cardano, remember, ADA, in terms of advantage, you want to look at it in terms of scalability. Remember, Cardano aims to offer scalable and sustainable blockchain platforms. So as I said, it's also majorly in terms of peer review research. It's developed with an emphasis on academic research and on formal methods. And then we also mentioned Polkadot, which people call DOT. And we said it has an aspect of what they call interoperability, in the sense that Polkadot aims to connect different blockchains and improving what they call compatibility. And it's extremely helpful for governance in the sense that it's an on-chain governance system, allowing token holders to vote on network upgrades, as it were. So I would like to go on and on. Whatever comes to mind, I will discuss it. But then there's also what they call Uniswap. Some people call it Uni. Uniswap has an advantage about being decentralized in terms of exchange. So Uniswap is also a leading decentralized exchange for trading what they call cryptocurrencies, in terms of what they call liquidity pools. So users can actually provide liquidity to earn fees. Another one that is not very common but still important is Solana, what they call SOL. Now, in terms of advantage, it has what they call high throughputs, okay, or throughputs if you like. So Solana is known for its fast transactional processing in terms of scalability. Now, it's also important in terms of smart contracts, and it supports what they call decentralized applications, or DApps and DIFIs, as it were. Then there's what they call Cosmos. Some people call it Atom. In terms of advantage, it has what they call an interoperability, in the sense that Cosmos aims to connect multiple blockchain in terms of fostering what they call interoperability, as it were. In terms of scalability, it offers scalability solutions for DApps. There is obviously one I mentioned earlier, but comes to mind again, the so-called Avalanche, the AVAX. As an advantage, it is used for custom blockchains. So Avalanche allows the creation and custom of blockchains for various applications, and some will argue that it's highly scalable and it's designed for, low-cost transactions. And then Monero, remember Monero, XMR, in terms of advantage, it's extremely private. So it's therefore necessary for privacy. So Monero focuses on providing strong privacy features, making transactions confidential and even untraceable. And the aspect of fungibility, remember the aspect of fungibility, noting that every unit of Monero is interchangeable and enhances what they call fungibility. And remember, we also mentioned some aspects to do with Dash. In terms of advantage, Dash is fast in terms of transactions, and Dash features often quick confirmation times and also low fees, as it were. And if you're arguing Dash in terms of governance and funding, it has a treasury system of self-funding and network development. So that is also important for you to understand. Then we mentioned something to do with the IOTA, so what some people call MIOTA. In terms of advantage, you would want to argue that you look at it in terms of the Internet of Things, okay? It's designed for machine-to-machine transactions, as I mentioned, and IOTA applications basically are relevant in terms of that. In terms of scalability, it realizes what they call a unique Tango structure for scalability and fees-less transactions. So it's very important, as I argued, that these cryptocurrencies, as I said, offer various features and advantages, catering for different use cases within the blockchain and cryptocurrency ecosystem. So while considering investing, as I say, it's important that you use a particular cryptocurrency. It's important that you evaluate its strength and weakness in relation to your specific need and goal. And stay informed about the latest development in terms of market dynamics, in terms of the essentials, in terms of fast evolving, in terms of the world of cryptocurrencies. Okay, I cannot emphasize, as I said, there are quite many, and I wouldn't want to cheat you by not discussing them. VeChain, in terms of what they call VET, it has advantages of what they call supply chain management. It focuses on improving, supply chain transparency and traceability. Its authentication is basically used for product authentication and even for what they call anti-counterfeiting. Then there's what they call the EOS. I think I talked about that, if I remember. It's important in terms of scalability. So the EOS aims to provide high speed and scalable decentralized applications, as it were. It's also user-friendly in the sense that it offers user-friendly experiences for developers and users. And then Philcoin. I don't know if I mentioned Philcoin, but Philcoin, as an advantage, it also helps in terms of decentralized storage. So Philcoin is designed for decentralized file storage, allowing users to rent, their excess storage space, as it were. It can have incentives in the sense that users can actually earn Phil tokens for providing storage services. And then there's what we call Theta. Some people call it Theta. Theta has advantages also. In terms of video streaming, Theta focuses on decentralized video streaming and content delivery. And it helps in terms of caching and sharing. So therefore, users can actually earn tokens by caching and even sharing video content. So these are very important aspects, and all these are different types of cryptocurrencies. Then there's what they call Zcash, or some people call it ZEC. In terms of advantage, it's extremely important in terms of privacy. So Zcash provides advanced privacy features through what they call zero-knowledge proofs, and it's also helpful in terms of selective transparency. So users can choose to make transactions in terms of private or even transparent, depending on their choice, obviously. Then there's what they call NEM, or some people call it ZEM. In terms of advantage, it has an advantage in terms of scalability, in the sense that NEM offers a scalable blockchain platform for various use cases. And smart assets, in terms of it also helps in that capacity, because it supports the creation of smart assets and tokenization, as it were. There is also what we call Harmony, or what people call One, or Harmony, as another cryptocurrency. In terms of advantage, it has scalability, in the sense that Harmony focuses on high, throughputs or low latent for dApps, and in the sense that it's also cross-shard transaction, so it enables secure cross-shard transactions. And then there's another that they call Waves. Waves is another. Waves has advantage in the sense that it does what they call token creation. So Waves allow users to create custom tokens and even launch their projects. And in terms of decentralized exchange, its features are built in decentralized exchange. So that's another thing to look out for. Then there's what we call EV, what some people call AAVE. In terms of advantage, it has what they call a DFI lending for that purpose. EV is a leading DFI platform for lending and even borrowing cryptocurrencies. And it also enjoys what they call flash loans. So it supports flash loans for users to borrow without collateral. Okay, so that's another advantage in terms of that. Then there's what we call DAI. DAI is another cryptocurrency, which is DAI. If you're talking about in terms of advantage, it has what they call stablecoin. In a sense that DAI is a stablecoin designed to maintain stable value. It is often pegged to the US dollar, and in terms of decentralization, it operates on the Ethereum blockchain. So these cryptocurrencies, as I say, offer various features. They have advantages in terms of catering for different users within the blockchain and cryptocurrency space. So again, I'll emphasize this, that when you're considering these cryptocurrencies for investment or for any kind of use or for development, it's crucial you understand their unique properties and how they fit into your space or your goal or your application. Okay, so cryptocurrencies, again, you continue to evolve, and so you must stay updated on the development because that is extremely important. Because of the importance of that, there are those who will argue and say, you never mentioned what I know, but NEO is something that you also want to look at. NEO allows what they call NEO, allows digitization of assets and the creation of digital identity. And in terms of smart contracts and even somewhat support what they call smart contracts and decentralized applications. And then there's also what they call Algorand. Some people call it ALGO, Algorand. In terms of advantage, it has high speed. In terms of Algorand, offers what they call fast transaction confirmation times and also scalability. And it's also used in terms of pure proof of stake. So it utilizes a secure and efficient consensus mechanism. And then another is what they call Maker. Some people call it MKR. In terms of advantage, it is important in the sense that it's used for decentralized finance, which we call DF or DIF or DEF, if you like. So Maker is a key player in DEF space with the creation of what they call DAI stablecoin. And what they call correlation in terms of users can actually look up assets to generate what they call DAI loans. And then there's what we call Sushi Swap. Some people call it Sushi, SUSHI. As an advantage, it helps in terms of decentralized exchange. So Sushi Swap is a decentralized exchange, what we call DEX, and enables what they call swapping of various cryptocurrencies. And it is also relevant in terms of liquidity provision, so users can actually provide liquidity for, to earn fees and sushi rewards, as it were. Then there's also another one which they call Zilliqa. Some people call it ZIL, Zilliqa. In terms of advantage, you may look at it in terms of scalability. Zilliqa focuses on high, through-ups or throughputs, and also helps in terms of securing a consensus mechanism. It's also necessary for smart contracts and supports smart contracts development, as it were. Then there's also what they call Nano. Nano is another one. Nano, as an advantage, has what they call instant transaction. Nano offers feeless and even instant transaction in terms of energy efficiency, and also utilizes minimum energy compared to proof of work cryptocurrencies. There's also another one that they call Kusama. Some people call it KSM. It's called Kusama. Now, in terms of advantage, you may want to relate it to the Polkadot ecosystem. So Kusama is basically a canary network for Polkadot, allowing for testing and even experimentation. In terms of governance and parachains, it's used as basically participating in what they call network governance and even support parachains. Another is what they call Chiliz. Some people look at it as CHZ, Chiliz. In terms of advantage, it's basically used in sports and entertainment. So Chiliz is used for fan engagement in sports and the entertainment industry. So it has what they call fan tokens, and therefore allows fans to own and even trade tokens associated with their favorite teams. And then there's what they call SELO. Some people call it SELO. As an advantage, it has what they call financial inclusion, and SELO focuses on providing accessible financial services and mobile payments. So stablecoins offers what they call stablecoins like USD to maintain what they call price stability. And then there's also another one they call DENT, D-E-N-T. In terms of advantage, this is basically popular with the telecom industry. So Dent aims to disrupt the telecom industry by allowing users to trade on mobile data. And in terms of global market space, users can actually buy, sell, and even share mobile data globally. Okay, so as I said, these cryptocurrencies vary in terms of purposes, including financial services, and in terms of decentralized applications, in terms of stable coins, in terms of unique industries like sports, as I say, telecommunications. So when considering them, it's important to assess how they align again and again with your specific goals and investment strategies and also user cases. So therefore, it's important to stay informed about their development and in terms of the overall currency, cryptocurrency market. Okay, we will probably point out a few others for purposes of again helping people who may be engaging in other areas, but within the mandate of cryptocurrency. This is what they call the Hedera, what they call Hedera hash graph, HBAR. In terms of advantage, it has high throughput or pullout. In terms of Hedera, it offers high transactional, pullout and low latency. In terms of security, it utilizes a unique consensus algorithm for security. There's also what they call SIA coin. Some people call it SC, SIA coin, SC. In terms of advantage, it is decentralized for storage, and SIA coin enables what they call decentralized file storage using blockchain-based network. It's affordable in the sense that it offers what they call cost-effective storage solutions. And then there's what they call LOST or IOST, LOST or IOST. In terms of advantage, it's an advantage in terms of scalability. So LOST focuses on scalability for DApps and even smart contracts. In terms of efficiency, it utilizes what they call unique consensus algorithms for energy efficiency, as I just emphasized that. There is another one called Quant. Some people call it QNT. As an advantage in terms of blockchain interoperability, Quant aims to connect different blockchains and networks. So in terms of, for example, overledgers, it offers for overledger platforms for cross-chain development. And then there's also what they call Ocean Protocol as another cryptocurrency. Some people call it Ocean. In terms of advantage, it is very necessary in the sense of data marketplace. Ocean Protocol is basically used for creating data market space or places in terms of data sharing. And it's also relevant in terms of privacy and in terms of control. So users can actually maintain control and privacy over their data. There is also another one called Horizon. Some people call it Zen. In terms of advantage, it's important in the sense that it provides privacy and scalability. So Horizon focuses on providing privacy and scalability and what they call side chains. So it also offers side chains for additional functionality or functionalities, if you like. Then another that is important is what they call Aaron, which is called EGLD. Aaron. Now Aaron, in terms of advantage, it has high throughouts or pullouts, if you like. So Aaron offers what they call fast transactional speeds and scalability. And it's also helpful in the sense that it's adaptive in terms of state sharing. It also utilizes a unique shading approach. And then another one that's also important is what they call Helium. Some people call it HNT. So Helium has an advantage. It is decentralized wireless network. Now Helium is used to create what they call decentralized wireless network. Okay, and what they call IoT connectivity, the Internet of Things connectivity. So it enables IoT devices to connect securely. So think about that as well. And then there's also what they call Decentraland. Some people call it MANA, Decentraland. In terms of advantage, it has what they call virtual reality or virtual reality. And Decentraland is a blockchain based on VR platform. So the digital real estate, for example, can buy and even sell and develop virtual land, as it were, in terms of that. Then there's what they also call Trust Wallet Token, Trust Wallet Token, TWT. Now, in terms of advantage, Trust Wallet is helpful in terms of Trust Wallet integration. So Trust Wallet or TWT is the native token for Trust Wallet. It's a popular mobile wallet. So it helps in terms of staking and governance and allows users to stake and participate in governance. And again, I will emphasize that these cryptocurrencies offer a wide range of functionalities, as I said, from data sharing to storage blockchain, in terms of interoperability, and also in terms of virtual reality platforms. So when considering again whatever cryptocurrency, you must evaluate and align it with your specific need and interest, and you must stay updated in terms of the development, in terms of the dynamics that are involved in terms of cryptocurrency, and in terms of what advantage that they may have for you. You may also want to consider REN in terms of advantage. It has that aspect of interoperability as well. REN also focuses on cross-chain interoperability in terms of allowing assets to move between blockchains, and it is also important in terms of privacy. It provides for enhanced privacy for users when moving between chains as well. Then also you may want to consider Flow. Some people call it FLOW. In terms of advantage, it is a blockchain for entertainment. So Flow is designed for digital, collectibles. Some people call it collectibles or collectibles. And in terms of gaming applications, I'll give an example. NBA Top Shot, for example, is famous for hosting NBA Top Shot, a platform for trading officially licensed NBA collectibles. So think about that. Then there's what they call BitTorrent, what they call BTT, BitTorrent. In terms of advantage, it decentralized in terms of file sharing, and so BitTorrent offers decentralized file sharing and even torrenting services. In terms of content distribution, users can actually earn BTT by sharing the network and even resources. And then you may also want to consider what they call Kava. Some people call it KAVA. As an advantage, it has an advantage in terms of the DeFi platform. And so Kava is a DeFi platform that allows users to borrow and even lend a variety of cryptocurrencies. So it's important in terms of cross-chain because it supports assets from various blockchains, enhancing what they call interoperability as it will. There is another interesting one called Ontology, which is also called ONT. In terms of advantage, it's important in terms of identity and data management. So Ontology focuses on the identity verification and data management. In terms of interoperability, it enables data and assets in terms of exchange across different blockchains as it were. There's also another called BAN protocol. Some people call it BAN. Now, in terms of advantage, it's necessary for oracles, and BAN protocols provide for what they call decentralized oracles for smart contracts. And they also are helpful in terms of data connectivity. So it connects smart contracts with real-world data and even what they call APIs. There's also another one called Origin Protocol. Some people call it OGN. It has several advantages, but I'll just pick out a few in terms of the fact that it's decentralized in terms of marketplace. So Origin Protocol offers for a decentralized marketplace for buying and even selling goods and services. And it's also helpful in the sense it has what they call fractional ownership. So it allows for fractional ownership of assets. Then you also want to look at what they call the NKN. NKN, in terms of advantage, it's a new kind of network. So NKN aims to create a new peer-to-peer network for data transmission. It's necessary in terms of mining, where we're arguing that users can actually mine NKN tokens by sharing what they call network resources. And then there's also what they call mirror protocol, that is MIR, okay, MIR, mirror protocol. In terms of advantage, it is necessary in the sense that it has what they call synthetic assets. So mirror protocols allow the creation and the trading of synthetic assets tied to real-world assets. So when you look at DeFi integration, it supports what they call DeFi application and in terms of yielding farming. Another cryptocurrency that you may probably come across is what they call ADA. Some people call it ARDR, ADA. In terms of advantage, it's a blockchain as a service. Some people look at it in terms of BaaS, but ADA offers what they call blockchain infrastructure as a service for business and developers. And it's also helpful in terms of scalability again, because it utilizes a unique parent-child chain architecture for scalability. Again, I'll emphasize that these so-called cryptocurrencies offer various applications and features, including, as I said, cross-chain compatibility in terms of DeFi services, in terms of data management, in terms of digital collectibles. So before investing or even using cryptocurrency, my friends, it is important to understand how they function, how they can be integrated in your specific case, and in terms of investment strategy. Additionally, you need to stay informed about the market development. It's very crucial to engage in the evolving world of cryptocurrency. Okay, without that, you may have serious problems. Serious problems. I cannot overemphasize the importance of that. I'll get into the legality of it if time permits, because I know that Uganda, you may not be able to function in terms of that. Okay, but there's also what they call Power Ledger. As an advantage, it's also helpful in trading. Power Ledger focuses on peer-to-peer energy trading in terms of renewable energy projects. It promotes renewable energy use and sustainability. There's another they call NASH, what some people call it NEX. As an advantage, it is non-custodial in terms of exchange. So NASH is a non-custodial exchange with a focus on user security. So DeFi integration is also necessary in this context, and it also provides for DeFi features like staking and even yield generation. Then you may also want to look at Acase. This is what they call Acase network, AKT. As an advantage, it's important in the sense that it's decentralized in terms of cloud computing. So Acase network offers a marketplace for decentralized cloud computing resources. It's also cost effective in the sense that users access cloud resources at a competitive price. Okay, so that's extremely important. There is also what they call Strux. People call it Stratees or Strux. Now, Strux, in terms of advantage, it's a blockchain platform, and Stratees or Strux is a blockchain platform for enterprise and financial services. So in terms of development, it can support smart contract and also DApp development, as it were. There is another one also they call Request. Some people call it REQ. If you're arguing it in terms of advantage, then you want to look at it in terms of blockchain invoicing. So Request focuses on blockchain-based invoicing and payments. Okay, in terms of transparency, it provides for transparency for accounting and even auditing. So I think you're realizing that almost all these cryptocurrencies are unique to a particular task or cause, if you like. There is what they call Oasis network. Some people call it ROSE. It's important in the sense it provides what they call data privacy. So Oasis network emphasizes data privacy and secure computation. It also helps in confidentiality. It enables privacy, preserving in terms of smart contracts. There's also what they call Swipe. Swipe is another. Some people call it SXP. Swipe. In terms of advantage, it has what they call cryptocurrency card. So Swipe offers a cryptocurrency debit card for easy spending, okay, and staking and rewards. So it uses what they call the stake XXP to earn rewards, as it were. There is also another that they call Enron, which is called EGLD. Okay, Enron, EGLD. In terms of advantage, it is highly, has a high, throughput output. Enron offers fast transaction speeds and also scalability, and it's adaptive in terms of state sharing and also shading, and also utilizes what they call a unique shading approach. There's also what they call Yan Finance. Some people call it YFI. Now, in terms of advantage, it has that added advantage of what they call DeFi as an aggregator. So Yan acts as a DeFi, yield aggregator in terms of optimizing the user's yield in terms of farming strategies. In terms of governance, YFI token holders usually participate in what they call protocol governance. Then we have another called Cadena, which is KDA. I probably have mentioned that, but this is a hybrid chain, and it offers both public and private blockchain solutions as well. So when you're arguing issues to do with cryptocurrency, you must be careful, as I said, because of the wide range of functionality. So it's easier for you to be excited and say, I'm engaging in cryptocurrency, but without knowing exactly what you're dealing in, whether you're in energy trading, whether in cloud computing, whether in diff optimization, whether in data privacy. So you have to, it's essential, as I said, to evaluate how you align your specific needs, in terms of investment strategies. I've seen people who have lost lots of money, and many of them have gone out and, oh goodness me, because people enter this issue without knowing exactly what they're dealing with. For beginners, you may want to engage in our book, as I told you. Yeah, look at Digital Money, the book Digital Money, Cryptography in Uganda by Acase Lubogo. Then you may understand what we're talking about. There's also Polygon. Those of you who talk about Matic, some people call it Matic. In terms of advantage, it has high scalability. Polygon enhances scalability in terms of the Ethereum network. It has what they call layer 2 solutions. It provides for layer 2 scaling solutions for Ethereum, for example. There's also what they call Curve DAO token. You know, some people call it CRVs. In terms of advantage, it has Curve is a dev platform for what they call stablecoin trading and even yield farming, and it has what they call low slippage. It offers low slippage for what they call stablecoin swaps. Okay, and then there's others that have to do with, for example, decentral games. In terms of blockchain gaming, these are also important in terms of blockchain based what they call metaverse, with popular with casino games. In terms of, and also in terms of NFT integration, where it incorporates what they call non-fungible tokens for virtual assets. Then you could also look at what they call neutral or neutrino. Some people call it USD or USDN. Neutrino, some call neutrino. In terms of an advantage, it has what they call algorithmic stable coins, and it's you may want to look at it in terms of stability, but also in terms of liquidity, because it aims at maintaining a stable value with liquidity pools. Then you may also want to look at OCHID. Some people look at it, call it OXT. It's important in the sense that it's decentralized, and it provides for decentralized virtual private networks, what they call VPN services. So you may also want to look at it in terms of that way. It offers enhanced, online privacy, as it were. Then there is what they call STORG, storage. Okay, as an advantage, it has it focuses on decentralized file storage and is cost effective, and it also offers cost effective storage solutions as well. There is also FET. Look at FET. Some called Fetch.ai. Some people look at it that way. It's autonomous in terms of its agency, and it enables the creation of what they call autonomous economic agents. And it's also important in terms of blockchain for Internet of Things. And it's, as I said, it's designed for the Internet of Things application. Then you may also want to look at Voyager as a token. Voyager token, some people call it VGX. In terms of advantage, it is an important cryptocurrency brokerage. Voyager offers cryptocurrency brokerage in terms of platform. So it's important, as I say, to comb these facts very well and do not take anything for granted. You'll hear so many names and you'll be excited and you'll be, taken by your friends. Let's try out, for example, AMP. But then you need to understand, AMP should actually be able to provide for collateral for payments. It's used for collateral in terms of securing blockchain payments. And it's also, yes, it's important in terms of instant transactions, but it offers, fast and secure transactions. You will find another and tell you, let's try out Zero Swap, or what people call Z. Don't be just excited about the word. You must understand that when I'm talking about Zero Swap, I should be able to appreciate it in terms of what they call multi-chain DEX, or what they call Zero Swap in terms of multi-chain decentralization exchange, as an aggregator. So look at it in terms of the interoperability. Does it support various blockchain networks? Yes. Look at those in terms of that. When you argue and you have a comprehensive understanding of some of these different cryptocurrencies, you will definitely not invest your money wrongly. I'm not ignorant of the fact, as I say, that Uganda still has advised that this is not something that we could carry on yet as a country because of regulatory concerns. So I know some countries, for example, that have probably engaged in cryptocurrencies around the world and have had their successes. For Uganda particularly, we are not yet there. Perhaps because we lack the knowledge, but perhaps also because we still have not taken the advantage in terms of comprehending. Yeah, I'll give you examples of how cryptocurrencies are being used for various purposes in different countries. For example, in terms of remittances, for example, in countries like El Salvador, in terms of pronunciation, Bitcoin has actually been used and adapted as a legal tender. So cryptocurrency is actually used to facilitate what they call cross-border remittances. So this has actually really helped people to receive funds from family members working abroad more quickly, and even at lower transaction costs compared to traditional remittances. Okay, and then I'll give another example in terms of what they call online retail, where we're arguing that major online retail, in terms of retailers and platforms, in terms of Overstock.com, for example, and Shopify, have actually embraced cryptocurrencies as a form of payment. So customers can actually use Bitcoins and other cryptocurrencies to make purchases for various goods and even services. So I'm just trying to break down for you the applicability. Now, look at it also this way. There's also what they call decentralized finance, what they call DeFi, or whatever you want to call it, DEFI. DeFi platforms like Compound or even Aave and even MakerDAO have actually do offer lending and borrowing services to farming. They allow users to earn interest in terms of crypto holdings and even access loans without, any serious problems. So that's another advantage. They talk about what they call non-fungible tokens, what they call NFTs. NFTs are actually used to represent ownership in terms of unique digital services, including art and music and even virtual, real estate and collectibles. So prominent artists and even creators such as Beeple and even CryptoPunks have actually sold NFTs for significant amounts of money. Think about that. Yeah? And then we have what they call smart contracts and dApps. An example is Ethereum-based smart contracts in terms of power decentralized applications, that offer various services from even gaming and even virtual real estate and to decentralized exchanges like Uniswaps and even decentralized predictions in terms of markets. Yeah? So it's a broad and big game that we're talking about here. Supply chain management in itself. As an example, companies, as I said, like IBM, food trusts, use blockchain and cryptocurrencies to improve their transparency in terms of traceability. Yeah, and also food chain supply. So consumers can actually track the origins of their products and even verify their authenticity. Yeah, and then another aspect in terms of usability is what they call tokenization of assets. An example is what they call Real IT and other platforms that tokenize real estate, allowing what they call fractional ownership of properties. So this opens up investment opportunities for broader range in terms of individuals. And then we can't argue more, we could argue on in terms of privacy and security. Example in terms of privacy-focused cryptocurrencies like Mereno and even Zcash that enables users to make transactions with enhanced privacy and anonymity. Think about that. So they are often used for security and privacy-focused purposes. So some of you want to hide your money without knowing who. Maybe something to venture into. Then charitable donations. Yeah, in terms of charitable and non-profit organizations like maybe Red Cross, these also accept cryptocurrency donations. These organizations actually use cryptocurrencies to increase transparency and reduce transactional costs associated with traditional donations. Think about that. Yeah, and in terms of gaming and virtual worlds, I'm just laying a case so that when we present it before our country, we say, wait a minute, I think we have a cause to answer. Not so. So gaming and virtual worlds. Cryptocurrencies and blockchain technologies are integral in terms of virtual economies within video games and virtual world. So games like, for example, Axie Infinity and even what they call Decentraland have their economies built on blockchain technology. Think about that. So these examples demonstrate the versatility and the wide range of applications of cryptocurrencies, from financial services to art to supply chain management, even charitable donations that I just mentioned. Cryptocurrencies have made a great impact in terms of various sectors, providing what they call innovative and even efficient solutions. So it's no doubt that I've just talked about different countries that have engaged in them, right? So, what can Uganda learn? If El Salvador, for example, is using Bitcoins, actually El Salvador became the first country to adopt Bitcoins as a legal tender. Think about that. So the government has actually introduced what they call the Chivo wallet, providing about $30 in terms of Bitcoin to every citizen who downloads and even verifies the wallet. Think about it. So this move has actually led to potential, improvement in terms of financial inclusion, especially to the unbanked population. Yeah? I'll give you another example in terms of countries. Switzerland, for example. Switzerland uses what they call crypto in terms of various in terms of various sections. Now, Switzerland is known for its crypto-friendly regulatory environment and has actually attracted numerous blockchain and even cryptocurrency projects. Now, for example, in the city of Zug, often referred to as Crypto Valley, is a hub of blockchain innovation housing many cryptocurrency companies. Think about that. Yeah? I'll give you another example. US, the popular US, where many of you love going. They have the aspect of crypto. In the US, it has been significant in the sense that cryptocurrency has been adopted with numerous cryptocurrency exchanges in terms of blockchain startups. And there has been a growing what they call DeFi sector. So regulatory, clarity varies obviously depending on each state, but they have embraced it on a major role in terms of cryptocurrency. Okay, Singapore, think about it. Singapore has actually established itself as a global, crypto hub with clear regulations and even supportive, approach to a blockchain innovation. The country is home to many cryptocurrency companies and even blockchain projects. Yeah, I'm just breaking it down for you in terms of giving examples. I've gone through the meat. Now a little bit of the bones, yeah, and the bone marrow, so we get the soup and enjoy it. Not so. Now Japan itself is another one. Japan is known for its regulatory framework in terms of cryptocurrency, which has actually contributed to a safe and thriving crypto market. The country has even a significant number of cryptocurrency exchanges and a well-informed user base. Yeah, I'll give you another example. South Korea. Talk about South Korea. South Korea actually is has one of the world's largest cryptocurrency markets with high levels of cryptocurrency trading and active user engagement. Yeah. However, someone can argue that regulations have actually, fluctuated with periods of increased scrutiny. So we're not denying that scrutiny should be there, but we're saying that how about adapting and creating substantive regulatory frameworks that can enhance these things to operate. Germany is another country. Germany, for example, has a growing cryptocurrency market and is known for its progressive approach to blockchain technology. Yeah, it has actually attracted a substantial number of blockchain and even crypto-related businesses. Yeah, so think about that. I could argue also Malta. Malta is another one. Yeah, in spite of its size, Malta is actually referred to as a blockchain island. Think about that. Due to its blockchain and cryptocurrency-friendly regulation, the country has actually attracted several exchanges and even blockchain startups. Yeah. So Estonia is another in terms of example. We could argue on and on and on and give you several examples. But Estonia has made significant efforts in terms of implementing blockchain technology in various government services, including e-residency and digital identity verification. Yeah, so we have no excuse. Venezuela is another one. Yeah, Venezuela, in terms of the petrol, they call it petrol. Venezuela state-backed cryptocurrency is called petrol. Think about that. Venezuela has actually been one of the earliest adopters of state-backed cryptocurrency. So while petrol has actually faced criticism and controversy, it represents an attempt by the government to address such economic issues. Now, I'm not oversaying it for cryptocurrency. I'm only saying it's a force to reckon with. It is something we have to prepare. It is something we have to open ourselves to. It is something we have to have a substantive regulatory framework. It is something we could learn, benchmark from other institutions. It is not something we could sweep under the carpet. I know that we take it with a pinch of salt. I know that we should be mindful in terms of regulatory framework. And those are the things that I'm saying, that ignorantia and excuse that. Ignorance of the law is no excuse. We should be able to co-opt, we should be able to adapt, we should be able to benchmark, we should be able to learn. Because if we don't do that, people are going to take advantage of us. And I have so many colleagues I know who have engaged in this, and that's why I've labored to explain almost everything. And many of them have lost money, rightly or wrongly. United Arab Emirates is another example. The UAE, particularly Dubai, for example, has been actively exploring the use of blockchain and cryptocurrency. And the government has even launched what they call a blockchain strategy. They did that in 2021 to digitize their government processes and services. Now, you could argue and say, how about Africa? Yes, Nigeria. Yeah, Nigeria has actually focused on what they call peer-to-peer trading. Nigeria is one of the leading countries in terms of cryptocurrency adoption, particularly in terms of Bitcoin, despite its regulatory challenges. Peer-to-peer trading volumes are high, and cryptocurrencies serve as a means of remittance and even investment. Not so. So it's important. China, who doesn't know about China? Perhaps the next superpower in terms of economic power, perhaps even in other areas as well. Yeah? They have what they call the digital yuan, or pronunciation, perhaps yuan, what they call the ECY or CENY. China has made significant progress in the development and testing of its central bank digital currency, known as the digital yuan. It's being, piloted in terms of various cities, including Shenzhen. Those of you who have been in some of those areas. Australia has a growing cryptocurrency market, well-defined regulatory framework. So the country has actually seen increasing acceptance of cryptocurrency for payments and even investment. So we have no excuse, my friend. We just have no excuse. It's a question of benchmarking. It's a question of adapting. We have written the books for you. We have gone on YouTube to explain the things for you. What are you going to do? Canada is another country. Canada has a thriving blockchain and cryptocurrency ecosystem with numerous exchanges of blockchain startups. In terms of regulatory authorities, it has even provided some clarity in terms of legal status of cryptocurrency. Why don't you bench that? Why don't you bench? We don't have a governor right now. Yeah, but the His Excellency can listen to these things and say, wait a minute, maybe this is a way to go. Yeah? Because whether you like it or not, we have evolved. Systems evolve and we have to evolve with them. Philippines is another one. Philippines has actually embraced cryptocurrency in a way to facilitate remittances and embracing more cost-effective and even faster cross-border money transfers. Evolving. We started with what? Cowrie shells. They used to sell them cowrie shells. Remember those things? We went to either barter exchange, then cowrie shells, then the ledger. So we have to learn to co-opt and adapt. Yeah? Thailand is another. Thailand has actually established a regulatory framework in terms of cryptocurrency that has seen the growth in terms of cryptocurrency and even blockchain in terms of the industry. Brazil. Some of you know Brazil for football only, but they have also engaged these things. Yeah? And these are growing superpowers, by the way. You can't brush them off anymore. Brazil has a growing cryptocurrency market with a focus on trading on investment. Cryptocurrencies are used in terms of remittances as an investment asset. Yeah? We just cannot go silent, my friend. Gilberta. Think about if Gilberta can have it, how about you, innocent Uganda? Yeah? They have actually focused on regulation. Gilberta is actually known for its crypto-friendly regulatory approach, which has actually attracted several blockchain and even crypto companies in the region. Yeah? So these are things that are important. Now, Saudi Arabia. Some of you have been talking about the ribas and the aspects of the banking systems, the Sharia banking system that have been incorporated. Sharia, even Saudi Arabia now has actually explored the use of blockchain in areas of cross-border payments and supply in terms of chain management, in terms of fostering blockchain. Look for a book that talk about Islamic banking in Uganda, where we make comparison in terms of the riba, in terms of what we can borrow and how it's applicable it is. Now, Saudi Arabia is actually bringing it in terms of cryptocurrency. Yeah? So, what excuse are we going to give? Ladies and gentlemen, what excuse are we going to give? Yeah? So, the intention of this discussion is to provoke our country, to provoke our ministry, to provoke our president, to provoke whoever it is concerned that we can co-opt. I know the danger, and I'm not saying let's go crypto, and I don't want this to be used as what? As an excuse for people to make errors and mistakes. But I'm just saying we can benchmark, we can make these arguments. And if it's a question of Africa, I can just literally mention a few countries. I know I mentioned Nigeria, but I could mention others that you could benchmark from. Yeah? Nigeria, as I said, focuses heavily on Bitcoin. It's important for you to look at that. And by the way, Nigeria is the leading economy in Africa. South Africa used to be, but now talk about Nigeria. Yeah? South Africa is another one, by the way. South Africa also uses cryptocurrency. In fact, cryptocurrency is actually growing in terms of cryptocurrency and the so-called blockchain economy. In fact, in South Africa, cryptocurrencies are used for investment, for trading, and even for remittances. The government, and regulators have actually made efforts to establish a regulatory framework for digital assets. Yeah? So, Ghana, on the other hand, in terms of African perspective, Ghana is among the countries where cryptocurrency is actually gaining popularity. Think about that. So Bitcoins, on the other hand, and other cryptocurrencies are actually used for investment in terms of online transaction and remittances. I'm now discussing in terms of African countries, so that you know that I'm not simply speaking from what? From planet X. Kenya has a vibrant blockchain and even cryptocurrency community. Yeah, digital currencies are used in terms of cross-border payments, and blockchain technology has actually been explored for various applications, including supply chain management. Some of these things sound so strange, and yes, some people have taken advantage of them to the detriment of unsuspecting public, and that's why we have to take the liberty of going through the nitty-gritties of painfully explaining. Yeah, Uganda, on the other hand, we may have to adapt a few of these things. I know there is a recommendation, perhaps for purposes of trading carefully. Uganda has not co-opted it. Morocco, on the other hand, has shown interest in terms of blockchain technology. It has even hosted what they call the blockchain conferences and initiatives to explore its potential. I know Uganda, we've had one here where they sat and did a conference here, and quite a number of issues, although government has not outrightly come out and given it a green light. But I've seen some people engaging in it on the streets openly, and maybe that's the reason why we have to be a bit more educative in terms of the cynical. Cynical, on the other hand, is exploring the use of blockchain technology, particularly in the financial sector, in terms of blockchain for improving land tenure records and even other applications. I just explained to you that the use of blockchain in terms of how big the whole thing is. Blockchain in itself is big. Tunisia has actually experienced what they call, even experimented, by the way, blockchain technology in terms of digitalization, in terms of its national currency, what they call the Tunisian dinar. The central bank has actually explored the issuance of central bank digital currencies. Yeah? And then our friend, our good neighbor here, who's taking us, to use the Shiganda phrase, I forget the right word, but Gakagude, Rwanda has expressed interest in blockchain technology for various applications, including the supply of chain management. And government has explored the use of blockchain for land registry. Think about that. Where are you? Where are you guys? Sierra Leone. Sierra Leone has actually conducted blockchain-based elections as a pilot project. Think about that. Exploring the use of blockchain for transparent and even secure voting systems. Now, where are you? Where are you? These are things, my friends, that I'm talking about. I'm not making up stories by myself, but we have dug into research at the Sue Genes Center. We have been careful to write some of this information for you. We have told, go and look out for our books, Digital Currency in Uganda, by Lubogo, Isaac Christopher. Find them in all substantive major bookshops. Abreast yourself with some of this information. Acquaintance yourself with some of this information so that you can understand what we're talking about, so that you are not taken advantage of by what? By unsuspecting fraudsters. Not so. There are many people who take advantage of people in terms of the ignorance, and that's why we are emphasizing and overemphasizing and re-emphasizing that this is not a mandate for you to engage in cryptocurrency trading or stuff like that, but it's simply knowledge. It is simply knowledge so that you can comprehend and understand that it is only helpful for you to have a much broader perspective of what we are talking about. Yeah? And we will knit it up also by arguing that international organizations and initiatives have actually tended to work out guidelines as well that recommend the use of cryptocurrency in terms of regulation, but also in terms of cooperation. Yeah, and some of them may be things like the Financial Action Task Force. Some people call it the FATF. So the FATF is an government organization that sets international standards for combating money laundering and even terrorist financing. It has provided guidance on how, for example, countries should regulate and even supervise cryptocurrencies related businesses to prevent what they call financial crimes. So that is important. Now, there's also what they call International Organization of Security Commissions, the IOSCO. So the IOSCO focuses on security regulations and has actually issued reports on regulations of crypto assets and even on initial coin offerings. Yeah, and then there is also what they call the Bank of International Settlements, the BIS. Now the BIS has actually explored central bank digital currencies and their implications in terms of international financial systems. So all these bodies, I'm looking at them in terms of as benchmarking. This was what they call International Monetary Fund. I mean, you know IMF and World Bank, don't you? These organizations have actually conducted research on potential impact of cryptocurrencies and blockchain technology in terms of global financial systems. Yeah, UN itself as a body, UN has actually explored the use of blockchain technology for various applications, including the supply of chain management and even identity verification. Yeah, so it's very important. So despite these efforts, the legal, obviously, and regulatory framework of cryptocurrencies remains largely a matter of national jurisdiction. Please remember that. It remains majorly a matter of national. So the fact that other guys are doing it, not to jump and say, aha, Lubogo has said it, let's run on it. No, each country has its own authority to create its own laws, to create its own regulation related to cryptocurrencies and blockchain technology, and therefore resigning its own patchwork in terms of legal approaches around the world. So, as I said, some countries have embraced cryptocurrencies by doing what? Establishing a comprehensive regulatory framework, while others have banned and severely restricted their use, like Uganda. Not so. So the lack of single international or legal instrument for cryptocurrency means that individuals and businesses operating in space must actually navigate a complex and evolving regulatory landscape that varies from one jurisdiction to another. It's very important. Please don't forget that. So the legal support as far as cryptocurrency often comes in form of national laws and regulations, as well as specific court cases that set what they call precedents. So I want to give you some legal instruments and case law that may support your case as far as cryptocurrencies are concerned. Not so. Yeah? Let's talk about what they call Payment Service Directive. Yeah? Some people call it PSD2, which is, an offset of the European Union. This directive regulates electronic payment services within the European Union, including what they call cryptocurrencies. And it has set a stage for what they call legal recognition of cryptocurrencies as a valid means in terms of payment, in terms of encouragement of innovation of the financial sector. So please take note of that. And then we could also argue in terms of what they call Digital Commodity Exchange Act. Yeah, this is popular in the US. And this proposed legislation sought to seek or to provide for what they call a regulatory framework in terms of digital assets, including cryptocurrencies. And it's intended to provide legal clarity and support for cryptocurrency industry in the US. Yeah. You could also look at the so-called Virtual Financial Assets Act in Malta, particularly. That law particularly provided for a regulatory framework for cryptocurrency in terms of blockchain technology, in terms of promoting innovation while ensuring consumer protection and market integrity. Then you may also want to look at the virtual asset service providers, what some people call the FATF. This Financial Action Task Force set guidelines in terms of helping countries regulate virtual assets to service providers in terms of cryptocurrency exchange. The intention was to help combat money laundering and even terrorist financing. So these guidelines provide for a legal framework for cryptocurrency industry. If you had to argue that in terms of case law, you may want to look at the case of SEC versus Ripple Labs. SEC versus Ripple Labs. I remember I talked about Ripple Labs, remember? And I told you that it had issues. So when you look at SEC versus Ripple Labs, which is a 2020 case, United States, this was an ongoing, was a lawsuit that involved the US Securities and Exchange Commission suing Ripple Labs for the sale of what they call XRP as an unregistered security. So the case has implications in terms of legal status of various cryptocurrencies and the regulatory framework. So those of you who want to have more intellectual legal discourse, look also the case of State of New York versus Binfix and Tether. It's a 2019 case. It's a US case again. The New York State Attorney General's office alleged that Binfix and Tether engage in activities that raise questions about the banking of USDT stablecoin. The resolution of this case would actually influence the regulations of different stablecoins in their role of cryptocurrency ecosystem, as it were. You also want to look at the case of IRS versus Coinbase, a 2016 case, again in the US, where the Internal Revenue Services, what they call the IRS, sought data from Coinbase regarding US taxpayers who actually conducted cryptocurrency transactions. The case highlighted the importance of what they call tax compliance in the cryptocurrency space. Then you also may want to look at the case of WiseKey SA versus Bitcoin Swiss AG. It's a 2017 case in Switzerland, where a Swiss court actually ruled in favor of Bitcoin Swiss, recognizing cryptocurrencies as a valuable asset and even granting ownership rights in a dispute over Bitcoin. So where are you going to argue, my friend? I'm just giving you some case authority to justify some of the applications or the adaptation of cryptocurrency, especially Bitcoin, which I said is majorly perhaps the most popular. Yeah. So my friends, even as we look at this big story of cryptocurrency, or perhaps digital money for that purpose, we are not unmindful of the fact that the law may not 101% permit, depending on your jurisdiction. So it's important, it's extremely important that you align your transactions in terms of what the law says, the legality of it. You know, in UK, for example, what they call the e-money regulation, which provide for regulatory framework for economic money and even including cryptocurrencies. They even outline requirements in terms of business offering e-money services and even help ensure consumer protection. Yeah, these are things we could co-opt. Singapore Payment Services Act is another, where the Payment Services Act in Singapore establishes a regulatory framework in terms of payment services, which includes digital payment tokens, some people call it cryptocurrencies, and it actually aims at enhancing consumer protection and ensuring soundness and also integrity in terms of financial systems and even promotion of innovation in the payment or service sector. Yeah, you may want to look at what they call the Virtual Currency Act in Japan, which also provides for a legal framework for cryptocurrency in terms of exchanges in businesses in Japan, requiring them to be registered to comply with the anti-money laundering activities, not so, and even to know your customer, what they call the KYC regulations. Yeah, you also may want to benchmark from Securities and Exchange Board of India guidelines, what they call the SEBI. It has issued guidelines for insurance and even trading of security tokens, promoting regulatory clarity and even legal use of blockchain in terms of technology in India. Yeah, so many of these bodies and regulations I'm trying to cite give us the impetus that it's doable, and it's not something that we can simply leave in isolation. In terms of case law, again, look at Silk Road case, where Silk Road case involved the conviction of Ross Ulbricht for operating what they call the Silk Road on online marketplace for illegal goods and services that used Bitcoin for transaction. The case highlighted the legal implication of cryptocurrency and the use of illicit activities. Yeah, it will shed light. So what we're talking about has happened before. Yeah, look at MT Gox bankruptcy case. It's a 2014 case in Japan, where the bankruptcy and legal proceedings surrounding the MT Gox exchange, which was once the largest Bitcoin exchange, raised questions about the legal status of cryptocurrency in terms of consumer protection and even exchange insolvency. Yeah, when you labor to go into these, they will give you some of the things, that the nitty-gritties that we're trying to discuss, and maybe what we may have left out in our long talk here in as far as cryptocurrency or digital money is concerned. Look at Ara versus Vinik. It's a 2017 case in Greece, where the case involved Alexander Vinik, the alleged operator of the BTCE cryptocurrency exchange, who actually was arrested in Greece, and it has implications in terms of international legal cooperation in terms of cryptocurrency related investigations. So this becomes, what I'm talking about is not news, it is happening. Look at the case of Mata of Coinbase Inc. versus Commission of Internal Revenue in the US. This case involved a legal dispute between IRS and Coinbase over the disclosure of customer data. So it raises questions about user privacy and tax compliance in cryptocurrency space. Yeah. So all these things I'm talking about, as I said, are not things that are strange. These examples demonstrate the complex legal landscape surrounding cryptocurrencies, where different jurisdictions are working to provide regulatory clarity, protect their consumers, and even ensure proper use of blockchain technology. So legal instruments and case continue to evolve, no doubt about that. So it's important, as I said, for our country, Uganda, to benchmark, to co-op, to hear and understand and listen, and be able to incorporate some of these things by strengthening the kind of jurisprudence that we may want for protecting our friends tomorrow. I can go on and on and on and on, but as I said, for the case of Uganda, we are not yet there. So you have to move wisely, you have to seek absolute consent from the ministry, from the central government, but also from the powers that be, for purposes of engaging in some of these things. Otherwise, it's not right for you to simply go without having substantive research As I said, the law may change. Perhaps even as I speak now, there could be an amendment. There could be what? There could be there could be an act of parliament that may want to bring what, digital money or cryptocurrency into a currency in this country. As I said, I've seen it happen left, right, and center. So I could be I'm not unmindful of the fact that the law must change, must be seen to change. So with that long and very helpful discussion, I would like to say thank you for paying maximum attention to the discussion that I've just been engaging in, and I wish you a very nice time and success. God bless you, and thank you for your attention.